Good day, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrading.com with your Pro Trader tip for today. And that is dealing with strategies around, option strategies around certain events. Okay. So, one of the basic strategies that is taught when you're learning about options is straddles and strangles. They're very easy, they don't involve margin, just buy call, buy put. The thing is the one thing that not is usually taught is that these are ideal, really ideal around stocks that have a certain event about to occur, such as a biotech stock that has a pending FDA announcement. Or in the case of our publications, such as Delta Neutral Breakout and Delta Neutral Income, they revolve around earnings. Earnings are the event that drives some of these strategies, some of these events, and specifically straddles and strangles. Okay. So let's take a look at an example. This is trade ID 1424. This is in our Delta Neutral Breakout portfolio. The stock was Moderna, and we sent out the publication on February 12th. All right. And the commentary came out citing the stock usually moves around 16% on average. Okay. And we were getting favorable pricing on the strikes. So let me pull up a copy of the image here. So we have our straddle here in the green. Okay. So the February 21st, 30 and a half strike call and 30 and a half strike put. All right, 30.5, 30.5. The debit was $3.62. Now, we did this two times. That's why you see the entry debit of $724, because we did the trade two times. And if we go down to the risk graph here, what we're looking for is the stock to break out. All right. Now, historically, this stock is a mover through earnings, and this is one of the criteria for doing a straddle or strangle. And the thing is that a lot of people do these strategies without an event to move the underlying instrument, and therefore they often get very frustrated with these strategies because there is a lack of movement. But earnings are one of those things where we do find some movement. Now, we had an interesting movement here on Moderna through earnings. Let's take a look here, and if we go to the 14th, all right. So Friday, the 14th, and we look here, earnings came out and Moderna moved. But look at this. It only moved up 4.5% on the end of the close, nowhere near the average move in the stock. All right. So commentary was sent out. We had a small loss in the trade at the time. I sent out commentary talking about what the earnings were. The stock just didn't move. In fact, my commentary title was Moderna declares results provided muted movement. Well, because I still had time in the trade, 7 days over here near the right-hand side, left of the Greeks here, you'll see days column. I had a week left in the options, so we stuck with it. So we go through the weekend. We held this through the weekend, and we get to February 18th. And lo and behold, Moderna makes a move. Okay, the stock was trading higher by another 11%. Okay, 11.46%. And we sent out, look at this, profit of $263 on a debit of $362. That's a 72.7% return. All right, so we did that two times. So we're looking at over $500 profit in just a week on a risk of $724. We sent out the exit alert for $12.50. That's $1,250. You net out the debit of the trade, and the end result was a $510 profit and a 68.92% return in just 6 days. So 6 days of being in a trade and literally a 68.9% return on your risk. That's a pretty good move. And the key there was not to panic, even though the underlying stock didn't move. It did move a bit. It moved 4.5%. But then we got the big follow through, and that provided the profits for the trade. So really a good analysis at the beginning, sticking with the trade, provided great results. That's your pro trader tip for today. Everyone have a great trading week, and we will talk to you again soon. Take care.